Welcome to the deep dive. Today we're diving into indexed annuities. And, I think a lot of our listeners are probably familiar with, the basics, but we're going deeper here. Think of this deep dive as like your crash course on really becoming an indexed annuity insider. You know what I mean? We've got research articles, a whole nine yards, and we're like extracting those golden nuggets just for you.
Exactly. We're going to be dissecting those, the fine print, uncovering those little aha moments that'll help you make those smart decisions about your money,
Uh,
especially as you're thinking about, that secure retirement.
okay, so let's paint a picture, right? You're looking to grow your savings, but the stock market's volatility has you a little freaked out, to be honest. And that's where you hear about indexed annuities. They're pitched as this best of both worlds deal potential for market link growth, but without actually being in the market. Is it for real though?
That's what we're here to uncover. So let's break it down. Imagine this. Your money's with the annuity provider, not directly in the stock market, right? They use a portion of your premium to uh, essentially utilize options that are tied to a specific market index. A lot of times it's the S&P 500. It's well, they're dipping their toes into the market on your behalf, but with one major difference, your principal. It's protected. No market losses.
So it's less about riding the roller coaster yourself and more like having a really skilled strategist navigating those loops for you, making sure, you're never fully exposed. But if you're not directly invested, how do you actually, see the returns?
That's where indexing comes in. Basically, your interest earnings, they're linked to how well that chosen index performed. The index goes up, you earn interest, but there's usually a limit, a cap, which we'll definitely get into later. And then if the market decides to take a tumble, well, your principal. It's safe and sound.
Okay, so you're essentially insulated from those those gut-wrenching drops, which honestly, for a lot of people, especially as they're getting closer to retirement, that's a huge sigh of relief. But let's be real, this sounds a little too good to be true. There's got to be a trade-off somewhere, right?
Of course, of course. There are always trade-offs, right? And we'll definitely unpack those. But first, let's think about why someone would even consider an indexed annuity in the first place.
Yeah.
And for a lot of folks, it boils down to one word: security. You're not investing directly in the market where your principal's always on the line. An indexed annuity gives you a level of certainty that's honestly pretty hard to find elsewhere. Think back to 2008, or really any time the market takes a nosedive. With an indexed annuity, your initial investment, that principal, it would have stayed right where it was, totally untouched.
That's got to be a huge weight off your shoulders, especially as you're getting closer to retirement. Knowing that a big chunk of what you've worked for is shielded from those market storms, that's got to help you sleep at night.
Precisely. And on top of that, that principal protection, you've also got the benefit of tax-deferred growth. And, you might be thinking, tax deferral, isn't that pretty standard with most retirement accounts? And you'd be right. But here's where indexed annuities, they get interesting. The way they're structured, it allows for some potentially significant tax advantages, especially for those in those higher tax brackets.
So it's like a double whammy of potential tax savings. First, you're deferring taxes on the growth, and then down the line, you might even be withdrawing those earnings at a lower tax rate during retirement.
You got it. It's like you're building this financial fortress designed to protect and grow your wealth over the long haul.
Okay, so we've talked about how indexed annuities offer that security and, the tax advantages, especially for those who are in higher income brackets. But at the end of the day, we're not just looking for a safe place to park our money, right? We want it to grow. So how do indexed annuities actually stack up against other investment options?
Well, that's the million-dollar question, right? And the answer, as with many things in finance, is, well, it depends. Remember those caps we talked about? Those play a big role in, how much you could potentially earn.
Right, those limits on how much interest you can earn, even if the market just takes off. So maybe we should, unpack those a little bit.
Absolutely. Let's say you've got an indexed annuity,
Uh-huh.
and it's linked to the S&P 500, right? And the index has a really, really good year. It shoots up by 15%. Now, your annuity, let's say it has a cap of 8%. So even though the index did way better, you're only going to earn that 8%.
So it's kind of like you hit the jackpot, but you only get a portion of the prize. You're safe from the losses, but you're also leaving some of those potential gains on the table.
Exactly. It's a trade-off. And it gets even, well, more interesting because there are actually different types of caps. each with their own, quirks. One that you'll see pretty often is the participation rate cap. It's like, well, imagine you're splitting the profits with the annuity provider, right? So if the participation rate is, say, 80% and the index gains 10%, you'd earn 8% interest. You get your share of the gain.
Okay, so you're participating in the market's upside, but like not all the way, right? It's like you have skin in the game, but you've agreed to share the winnings.
Exactly. Now, another type of cap you might come across is the spread cap, or sometimes it's called the margin cap. Think of it this way. A small percentage gets, like, shaved off of the index's gains before they land in your account. So let's say the spread is 2% and the index gains 12%, you'd earn 10%. The gain minus the spread.
Got it. So before you jump into any indexed annuity, you really need to look at what kind of cap they have going on and like how that could actually play out, affect your earnings. Are there any other like factors that can impact how an indexed annuity performs?
Well, absolutely. Fees, for example. Just like, pretty much any financial product out there, indexed annuities come with different fees, and, well, they can definitely make a dent in your overall returns. There are surrender charges, administrative fees. You might even see things like mortality and expense risk charges. Basically, those are insurance costs that are kind of baked into the product.
Okay, so there's a lot to like wrap your head around. It's not just as simple as like looking at the interest rate they're showing you. You've got to think about the caps, the fees, how it all fits together with your own financial goals.
Exactly. And that's why, having a good financial advisor on your team, someone who knows their stuff, that can be so valuable. They can help you make sense of the fine print, compare different annuities, and find the one that really fits, with your risk tolerance and your long-term plan.
It's like having a guide in, like a really complex maze. They can help you navigate and avoid those dead ends. So we've talked about the benefits, but what about the limitations? How easy is it to actually get to your money if you need it?
That's a really important thing to consider. Indexed annuities, like most annuities really, they're designed for the long game. They're not as liquid as, say, a savings account or even stocks. They usually come with penalties if you need to withdraw money early, so you really need to be okay with having some of your money in a place where it's not quite as accessible.
So maybe not the best place to keep your emergency fund or
Like,
money you think you might need in a pinch.
exactly. It's more of a long-term strategy.
Yeah.
It's about building that solid financial foundation for the future, not so much about, like, short-term needs.
Okay, that makes sense. So we've got security, the potential for growth, we've got those tax advantages, but we're also talking about limited liquidity. Seems like indexed annuities have a lot to offer, but there are some trade-offs to think about.
Precisely. And that's why it's so important to really weigh those pros and cons, think about your own financial situation, and, like we keep saying, get some solid advice before you jump in.
Speaking of advice, we'll be back in a minute with a recommendation for a financial advisor who can really help you navigate all of this. Don't go anywhere. And we're back. We've gone deep on indexed annuities, the good, the maybe not so obvious, and of course the wait, I can't get to my money right away aspects. But now let's bring it all home. How can you, our listeners, use this information to actually make smart decisions about your own money?
Right, because information's only powerful if you can, put it to work for you.
Exactly. So let's say you're listening to all of this and you're thinking, okay, indexed annuities, they sound kind of interesting. The security, the growth potential, the tax stuff. What are the big questions you should ask yourself to figure out if they're a good fit?
First things first, think about your risk tolerance. How comfortable are you with the idea of your money being in the market? Even though it's indirect, it's still, there.
Yeah.
Or is it more important for you to know that your principal is, like, absolutely safe no matter what?
It's like, are you a roller coaster person or do you prefer a nice leisurely walk in the park? Both are totally cool, but you got to know which one you are.
Exactly. And speaking of walks in the park, think about your timeline. Indexed annuities, they're not a sprint, they're more like a long scenic hike.
So if you're thinking long term, like 10 plus years, planning for retirement, maybe an indexed annuity makes sense. But if you need that money sooner, probably not the best tool for the job.
Right. Now, let's say retirement is on your mind. Think about the income you're going to need. An indexed annuity, because it can offer that guaranteed income. It could be a good way to, like, add to your Social Security or your pension. It's like having this steady stream of income coming in on top of everything else.
Especially when, the economy is a little shaky, having that guaranteed income can really make a difference.
Peace of mind.
Right.
Absolutely.
Yeah.
And then there's legacy planning. A lot of indexed annuities come with death benefits. So you can pass on your wealth to your loved ones
Yeah.
and, potentially even with some tax advantages. It's not just about taking care of yourself, it's about taking care of the people you care about.
That's a big deal for a lot of folks. But even though it's tempting to get caught up in all the good stuff, we've got to come back to those fees.
Always. Always read the fine print. It's easy to get excited about those potential returns, but you got to know what you're signing up for. Understand how the fees work, what happens if you need to withdraw your money early. All those details matter.
Because sometimes those details, they can really make a difference.
Absolutely. And that's why, and I know we keep saying this, but it's just so important. If you're thinking about indexed annuities, talk to a financial advisor, someone who really knows their stuff. They can help you figure out if it's right for you, find a product that fits your needs, and help you avoid any, surprises down the road.
They're like your financial translator, helping you make sense of all the jargon and the fine print. And speaking of finding the right guide, we actually have a recommendation for our listeners today.
We do. If you're looking for someone who truly understands indexed annuities and is really passionate about helping people make smart choices with their money, I can't recommend Helen Hou enough. She's a financial advisor, an insurance specialist, really knows her stuff.
Sounds like the real deal. You can reach her at 408-909-5865 for a free consultation. And remember, this deep dive, it was just the beginning. Do your research, ask questions, and make choices that help you reach your financial goals. Until next time, happy investing.